It is almost 11 a.m. in Singapore and 12 p.m. in Tokyo. Welcome to Bloomberg Markets Asia. I'm Haslinda Amin. Our top story today is the BOJ rate decision, a much anticipated rate decision. And we have our very own Sherry Yan, co-anchor of Bloomberg's the Asia Trade, reporting live from the Central Bank. Sherry, it is a consequential decision, I guess you can say that.
Especially given that we've been watching the Japanese yen so closely, right? And what happened at the April meeting when the Japanese yen plunged to a 34-year low. So no changes expected for the short-term target range. But at the same time, we're watching those debt purchases for any indication of a reduction that could effectively signal the start of quantitative tightening.
Yeah, it's the pace and the size. Sherry, we'll hear from you just shortly later. First, let's do a check-in on how markets are faring with Avril Hong in Singapore. And of course, bracing for perhaps the yen whiplash. We saw that at the April meeting where, well, we saw the range of about 300 pips.
Yeah, I think even if the BOJ comes in hawkish or less hawkish than markets are expecting, we will see that swing in the Japanese currency. As you looked at the past 11 times the BOJ decision came out, we actually saw the yen weaken in the 30 minutes after that. So it's really about the yen today. I mean, the BOJ is going to have to ramp up this pace of normalization of policy in defense of the Japanese currency, and in a way that potentially could come through the reduction of bond purchases. It's purchasing 6 trillion yen a month. This could be 5 trillion yen if the market's expectations come true. But as some of the analysts have been talking about, it's not just the amount they were watching out for, it is also the speed and the interval in which this is done. We're also going to be watching out for what it says in terms of rate hikes. And all this, of course, to support the yen if Japanese authorities want to avoid another expensive round of intervention. So we're seeing dollar yen still hovering at that 157.3 level. Weakness still coming through against the greenback. It hasn't just been weakening against the USD, also against the renminbi. And it makes you wonder the extent in which this might be affecting export competitiveness, how long the PBOC will tolerate this. Today we saw a yuan fix that was at the highest rate since January, something to keep in mind. Interesting to see also that the gauges are moving into positive territory, that support from marine transport stocks in Japan, as we're seeing in the rest of the Asia Pacific. And this is as the hopes fade for a Middle East ceasefire deal. China's very negative today, but as I say, let's flip the board and take a closer look at what we're seeing on dollar yen, because the yen could weaken regardless of what the Bank of Japan does today. But if it comes in hawkish, there are a number of support levels that we're watching. The 50-day moving average, that's about 155.3, and the 100-day moving average at around 152.5 level. That's what we're watching out for today, Haas.
That's right, but some say, you know what, there's very little the BOJ can do. It is about rate differentials. It does matter when the Fed starts cutting rates. Avril Hong, thank you so much for that. Let's get back to Sherry in Tokyo. Sherry, Governor Ueda's comments after the last meeting in April led to a plunge in the yen. How high are the stakes for today's meeting?
Very high, because as you said it, after the press conference in April, we had the yen fall to a fresh 34-year low, leading to what April called a very expensive intervention for the finance ministry, a record of $62.9 billion. This time around, we're not expecting any changes on the short-term rate range of 0 to 0.1%. But we are watching those debt purchases very closely, because at this point, if we see a reduction in JGB buying, that could be a solid indication and step towards quantitative tightening.
Sherry, why are we focusing so much on the BOJ's debt purchases in today's decision?
When the Bank of Japan hiked rates for the first time in 17 years 3 months ago, it left JGB purchases roughly unchanged. Now, this time around, they're buying JGBs at a pace of 6 trillion yen monthly. A reduction below that would mean that the balance sheet will start to shrink. And that could also mean that we could see JGB yields gaining ground, and that rate differential has, that you mentioned earlier in the program, that could actually have significant implications to support the Japanese currency. So far, we have seen the Bank of Japan come out and start tweaking its irregular bond buying operations. For example, in May, it rattled the markets by actually cutting back on those bond purchases, which sent another fresh signal to the markets that's willing to tolerate the market set those long-term rate expectations.
Suffice to say, Sherry, it is a very tricky environment for Governor Ueda. We've seen weakness in recent data out of the country.
Yes, so first quarter GDP actually contracted 1.8% year on year. So it makes it very important for Governor Ueda not to box himself in a signal for another rate hike in July if the economy is not in firm footing. Now, one saving grace can be that the central bank doesn't look at backwards data, it looks forward. And it appears to be confident that with the Shunto wage negotiations in the spring, we might see sustainable wage growth here in Japan. We have already seen wage growth data show a jump by the most since 1994. Of course, whether or not that is sustainable is a key question. We're expecting now the BOJ to come out with a statement anytime soon. We're not expecting an economic forecast, but the statement could be longer because it could include inflation and economic forecasts. Now, we will be watching if we're going to get any more signals from the Japanese economy when it comes to domestic consumption, which has been the weak point for Japan. Domestic consumption contracting for the past 4 quarters. We will see if Japanese households feel confident with these wage gains that they might go out and spend.
When it comes to the market share, we've seen, I guess, a reversal in terms of sentiment, more interest in the Japanese market. PIMCO is saying this week that it would be a good time for investors to return to the Japanese bond market. But you know what? Vol has been quite an issue when it comes to JGBs.
We have seen so much volatility, right? I mean, we had seen the 10-year yield rise to the highest level since 2011. We're back below that 1% level for the 10-year yield. And of course, a lot to do with the Treasury rally that we've seen overnight in the past few days, given what we heard from the Fed and perhaps inflation expectations easing in the U.S. economy. But we have seen more calls by the likes of PIMCO now, as you mentioned, saying that perhaps you can find some good opportunities in the Japanese bond market, especially when you take a look at really those inefficiencies that you're seeing there, given, of course, that the BOJ plays such a big role in the JGB market. We're talking about it owning more than half of the JGB bond market and what the implications are for pricing and trading of Japanese government bonds. But yes, the expectation, bracing for volatility, although right now the 10-year yield still heading towards that 0.9%.
That's right, and pretty interesting when you consider that Japanese investors themselves have been, dialing down in terms of their foreign bond holdings. Sherry-Ann, stick around as we bring in our guest who sees long-term value but short-term headwinds in Japan. Polka Mishra is a partner at Javelin Wealth Management, and she joins us in the studio. Polka, good to have you with us. First off, I mean, so much expectations that the BOJ will cut its holdings. I mean, is that even realistic that we will get something there?
Yes, firstly, thanks for having me. I think policy rates would remain the same. Bank of Japan is not going to take that risk at this point. But yes, we should see some indication on a slowdown in the purchases. But anything more than $500 billion reduction would look too hawkish to the market. So we're thinking around 5.2. Right now they're at 6 trillion yen a month. So we would think probably 5.5, 5.2 is what they could announce, but they will do it gradually.
Isn't it true that there's a lot of room for disappointment? I mean, it could be seen as perhaps a dovish tightening, no matter what the BOJ does.
Yes.
It's never good enough.
No, I think market is expecting a lot out of BOJ, so whatever they do, there will be a whiplash, as we were talking about it. There will be some disappointment, but after going through the noise, I think we still have to look at the long-term positives of Japan. But yes, in the short term, the BOJ cannot do much around the volatility that will
What
follow.
does it mean for the yen? Some are saying that disappointment could see dollar yen, rising by about 1%.
It could. And again, it's not just the Japanese policy making that impacts. It's the Fed's decision making that has a bigger impact on the Japanese yen, so less that the Bank of Japan could do. I would think that they would want to draw a red line at around 157, but it could go as weak as 1%. You're absolutely right.
Let's talk about that red line, because I was speaking to JP Morgan Securities and they thought that 157 would be the offsetting level given real wage growth. But at the same time, because oil prices came down, that could actually be much higher. What would that be in terms of impact for the markets?
Yes, so 157 is the expected red line. However, it's the wage growth, if you look at it, there's a lot more complexity there. We expect the real wage growth adjusted for inflation to come back to a positive. Large corporates are committed to increasing pays by over 5%. However, there is also the small and mid-cap sector, which is not compelled to increase the rates. And we think that the impact of that will happen over the next 12 to 18 months. So yes, there will be, there are those concerns around wage growth and thus the impact on the policy.
Do you look at external factors? It was really interesting to see the Japanese finance minister earlier today talking about potential imported deflation from China. If that has economic implications for Japan, does that change your assessment of what assets to invest in?
In fact, yeah, we have been a bit more broad in our allocation to Japan, to the overall market. We're still focusing on the larger caps. So in terms of Javelin Wealth Management, it would not change our view. But yes, imports become harder. Yes, we would focus. We still feel that the impact of the Japanese yen versus US dollar is much bigger. So import is still stronger than export-oriented industries in our view.
You know, it all comes down to the yen eventually.
Yes.
The focus is there. Ueda has talked about how he's not targeting FX rates, but when the yen dropped to a 34-year low, we saw the biggest intervention on record for the country. I mean, doing nothing really is not an option for Japan right now.
No, it is not an option. Japan is finally coming to fore. We are seeing recovery, and the Bank of Japan cannot. Yes, they would want to not put in measures, but as you mentioned, there were some of the largest measures they've ever put in. Anything weaker than 160 is very, very bad for overall for the Japanese economy at this point.
What kind of messaging do you think is important for Ueda to send out?
I think Japan needs an improvement in the consumer confidence as well as the business confidence, and they need to show support there. Domestic market is important in Japan. You have to remember they've gone through decades of a deflationary environment, and what we need to see is some concrete steps to highlight that yes, our first key focus is to get out of that deflationary environment permanently before we focus on further tightening, further growth. All that is secondary, but they need to get out of that mindset. And it's a whole economy that's been in that lost couple of decades. It needs to come out of that.
Yeah, and the biggest worry is that Japan goes back to deflation. Polka Mishra of Javelin Wealth Management is sticking around, and Sherian, co-anchor of the Asia Trade as well. And you can also turn to your Bloomberg for more coverage. Go to TLive Go to get commentary, get analysis from Bloomberg's expert editors. Well, coming up on Bloomberg Markets Asia, we speak exclusively with the CEO of Indian energy company Renew. Hear their thoughts on the net zero transition, and that's just ahead. Keep it here with us. This is Bloomberg. right, in the markets, risk off the table pretty much for most of Asia, under pressure, dragged down by Japan and China in particular, as we await that BOJ decision, a much anticipated decision from that BOJ. Take a look where we are in terms of the Hang Seng Index, down 0.2%. The ASX also in negative territory, but bucking the trend. We have the Kospi up and the TAIEX higher by 0.4%. Of course, overnight we had stocks in the US at a fresh all-time high, but that's not translating to more gains here in Asia. Overall, mixed picture at this point in time. Let's get more on markets with Polka Mishra, partner at Javelin Wealth Management, who is still with us. Polka, good to have you with us still. So I guess the Fed still front and center.
Yes, absolutely. We saw the language coming through from Fed. All very positive in terms of potential rate cuts. CPI data was weaker. Later we saw the PPI data as well, lower than expected. ISM data, again, softer, and we're seeing some consumer expenditure coming down as well. However, as we were discussing earlier, we also can't forget the non-farm payroll numbers, which surprised everyone in the market. And Fed's going to take all that into consideration. So we do think that we are on track for a one rate cut this year, but we're still in the camp of, is it only one or is it a maybe one rate cut? We think that the Fed is looking for a stronger negative inflation surprise before taking that step.
As you suggested, it needs to be a trend.
Yes.
And for a Fed that's data dependent, there is a possibility that we could see none.
It's possible. I mean, look at it. And in March, they were penciling in 3 rate cuts. And that was when the inflation data was much stronger. And now when the data is weaker, suddenly we are expecting a 1 rate cut. So Fed has changed its language many times. And if from now until September, the data does not consistently remain weak, then Fed is going to put its hands back and say, I'm going to watch further. They will continue to remain data-driven. They will continue to remain hawkish. They're not going to be impatient about it.
And for Asian central banks, they will wait for the Fed, unlike perhaps in some of the countries in the West. I'm just wondering, how do you play that? How do you play the theme of waiting for the Fed here in Asia?
Yes, it is trickier for Asia. We saw Taiwan kept the rates stable despite good data numbers overnight. They will remain dependent on the Fed. There will start to be some divergence. Asian markets cannot remain too patient for too long. The current,
such as?
So if you look at, you saw significant, these are smaller emerging economies, but if you see Pakistan reduce their interest rates by around more than 2%. Of course, it is from a highs of around 22%. We might see similar reactions in India because you have to manage your own economy. They will avoid the divergence for a certain period of time because of the currency concerns, but it is more of a concern for export-oriented economies and a little less so, which are less dependent on exports.
So where are the opportunities for traders?
So we feel, I mean, look, you do have to look at the language on Fed, and market is reacting a bit to the language. So we do feel that Taiwan, Korea, they remain strong plays in Asia. Would be more concerned around the emerging market economies here, especially LATAM, which have already gone aggressive with their rate cuts. So they will benefit a lot if Fed rate cuts come in, but if Fed rates remain higher for longer, those are the ones that will become a concern.
For Asian markets, it's also about China. Just when you thought sentiment was changing a little, ever so slowly, and we talk about additional tariffs from the EU now, and that's impacting sentiment in a huge way. Is it a buy? Is it not? What do you look at in China?
It is not a buy for us right now, as much as we would like it to be. And I think the tariffs are a smaller problem. China has a lot more internal problems that it has to tackle. Consumer confidence is low, and the biggest problem is still the real estate sector. They came up with measures, but they have not been effective, and they're finding implementation much harder. So just to give you some estimated numbers, so even if the purchase program went as planned, at a 20 to 30% discount, mind you, the overall reduction in the inventory will be less than 12%. So that doesn't solve the problem. And recently we heard that the SOEs have been asked to purchase at a reasonable price.
Whatever that means.
Exactly, and there is no clarity on that. So it's very important. The next month's meeting is very important. We need to see very clear, very decisive and very, very deliberate policy making as well as policy implementation for a revival in China. Otherwise, there's this whole theme of talking about Japanification of China that is very much in the play at
Do you see those opportunities arising this year, or it may take longer because policy implementation has been very, very slow in China?
It has been very slow and it has been very inconsistent as well. So it's very hard to predict, I think, because there have been so many false starts already. So I do not think that we will get, because most of the investors will want to see, as we talked about the US data and Fed, we talked about it, we want to see consistency in the policy, that it's not that, okay, one quarter you come up with it and then you backtrack again. So we do need to see the consistency. So I think it will be close to end of the year, next year, when it will start.
So if you're looking for consistency, continuity, you'll find that in India, post-election.
Yes, definitely. Elections did cause a bit of a scare, as you know, but there is a lot of policy continuity. If you look at the cabinet that Modi has formed, 25 out of the 30 cabinet seats are to the BJP, and the key portfolios remain with the same individuals. So, for example, the finance minister is the same, and she's been a very strong finance minister for India, and she has highlighted when she was asked about the budget next month that don't expect any surprises. We're going to continue to do what we have been doing. So you'll see capex spend, especially on infrastructure. You'll see focus on employment, youth employment, especially in rural sector, and consumer demand.
So presumably the way to play India right now remains infrastructure, remains consumers.
Yes, and we might be also seeing an opportunity in the small and mid-cap sectors in India, which have remained relatively suppressed until now, because the focus is on the large middle class of India, and spending from that sector will definitely support those sectors.
Polka, great insights. Do come back soon. Polka Mishra, partner, Javelin Wealth Management. Plenty more ahead. I think we have just the BOJ decision at this point in time. If I can just get it for you right now, the BOJ keeping its overnight call rate between at 0.1%. It's keeping its overnight call rate between 0 and 0.1%, keeping its upper bound on overnight call rate at 0.1%. Your reaction so far, Polka, BOJ, to reduce the amount of government bond purchase as expected, but no details on the numbers just yet.
Yes, but it is in line with expectations. No surprises there. I think hopefully the market will remain stable. We are not seeing much movement in the FX at this point, which is a good, no whiplash.
But it's always a drip kind of statement from,
yes.
from the BOJ. So pretty much expected. What would be a surprise in terms of numbers?
Anything more than $500 billion reduction would be a surprise. It would be away from typical attitude of Bank of Japan. It might be considered a bit too aggressive.
And I'm just wondering, like, in terms of the market expectations of what the BOJ might do. Some have talked about how the BOJ has 2 more moves this year, perhaps to, to 0.5% and to 1% later on. Were your own expectations?
Yes, I think later in the year, I think it's probably in October that we could see some action, especially because we are expecting better data this quarter. Some of the effect of the earlier earthquake in Japan would have been written off. We are expecting some improvement in wages in Japan. So once that happens, I think BOJ will be more confident of making going for a rate increase. Probably not full to 0.25%. Maybe they'll start with 0.1, 0.15. But in the larger scheme of things, these are very small numbers. But market will expect to see an action by then.
And therefore, the headlines right now, the BOJ to buy bonds as decided in March, and the bank will conduct purchases in accordance with the decisions made at the March 2024. So pretty much what it has stated before. So no surprise there as well. BOJ to specify its plan for bond buying at the next meeting. So in a way, it's giving some indication, but not too much.
Yeah, and I think they're probably also waiting for the Fed decisions, a bit more clarity from the US on the US rates as well. But yes, they do need to look at the data from this quarter. They can't make those decisions when the economy is just shrunk by 1.8%, as Cheryl just pointed out earlier.
All right, let's get back to Sherry An, who's been tracking developments for us as well. Sherry, pretty much in line with what the markets were expecting.
When it comes to the short-term rate range, yes, no move there. What was really interesting is that they have decided not to give us any indications of a reduction of JGB purchases. They're saying that they will hold a bond market group meeting on the JGB purchases, and then that they plan to specify that bond buying at the next meeting. Now, remember, the expectation and what's been reported so far is that the BOJ would reduce those JGB purchases to almost 5 trillion yen from the current 6 trillion yen. So we have seen now the Japanese yen look at that move, weakness of 0.4% against the US dollar, because this again has not met market expectations in terms of signaling the start of quantitative tightening. So the BOJ buying bonds as decided in March, saying that they have decided to cut the bond buying to allow yields to form freely, that the price trend seen around the target level latter half of the forecast, and that is necessary to watch FX and its impact on inflation. Of course, they already talked about the economic uncertainties on activity and prices. So those uncertainties are being taken very seriously by the BOJ. We have mentioned that the first quarter GDP year-on-year contracted 1.8%. Well, will we achieve sustainable inflation, of course, is the key point if the economy continues to decelerate. And despite the fact that we saw the biggest wage growth since 1994, how will that translate to domestic consumption is still a key problem for Governor Ueda. So I will be watching very closely the press conference at 3:30 p.m. local time for any indication of rate hikes to come as early as July. If we didn't get any more indications of where JGB purchases go, the key will be, will we have rate hikes as soon as July has?
And that is the key question, Polka, whether we get those rate hikes, and also how big this, the reduction in the bond purchases will be. So far, nothing. And like you said, it is a wait and see. And when you take a look at the reaction in the markets with the yen weakening further, there is disappointment. But we've already said there's so much room for disappointment when it comes to BOJ decisions.
Yeah, we expected this irrespective, unless BOJ went very aggressive, which they cannot afford to at this point in time. Yes, we would have expected a whiplash. It would be a lot more disappointing if we see stronger data and we don't see action from BOJ later in July or October. That's when it would be more negative for them.
It is also interesting that it was a unanimous decision to keep the rate decision, but not unanimous when it comes to that bond buying, and hence that's why I guess we,
Yes.
the BOJ is delaying announcing the amount. But it does seem like normalization is put a little bit on the back burner as well. It feels like it is being delayed. Is that a fair sense?
Yes, absolutely. They're kicking the can down the road. They just want to watch more. They don't want to take too many risks at this point. But honestly, not announcing anything in itself is a risk for the market. So investors are looking for some clarity. Investors are looking for some strength in conviction, and they need to give that to the market now.
When it comes to the equity markets in Japan, though, there has been so much optimism about the structural reforms that we've seen so far. Will it change the long-term narrative about Japanese assets?
No, I don't think so. I think the long-term story in Japan remains strong. Focus on shareholder returns has come back after decades, and what you have to realize is there is so much value to unlock over there that the short-term noise is not going to have an impact. Yes, it may delay the recovery, but we still remain long-term positive on Japanese equities.
What sectors are you looking at, especially if you're factoring a potential gain in yields?
Sorry, could you repeat the question?
What sectors are you looking at if you're expecting a rise in yields?
We are not allocating to specific sectors, but in the short term, of course, you have to take advantage of the weaker yen. So tourism is a sector that has been very attractive. It's been doing well. So that's one that you would focus on. We'd stay away from export-driven industries. We still don't see much ability to invest in the smaller caps in Japan. So that's where our calls have been.
All right, Polka, hang tight. Let's get more on the BOJ. Bring in Bloomberg Intelligence Chief Asia FX and Rate Strategist Stephen Chu. Stephen, it does seem like the yen is trying to, dollar yen at least, trying to breach that resistance of 157.71.
Yes, so it's actually the BOJ being the BOJ again and disappoint market. Now, before the rate decision, yeah, I mean, like, market was waiting for an announcement of a proper tapering, like probably a number cutting down the purchase of 6 trillion yen per month, but now there's nothing. Now, of course, they're going to announce it in July after they consult the market, but that's already kicking the can down the road, and that means it's a very dovish announcement from the market. Now, in the afternoon, when the governor comes out, he's going to explain a little bit about it and possibly hint about when will be the next rate hike. But if July is the meeting of announcing the QT or tapering of QE, then how likely is it will hike rate at the same time? So that's what market is thinking. So that's why the yen is reacting this way, weakening.
So if there is a rate hike from the BOJ this year, there could only possibly be one if July is out of the question?
I mean, like, market is already very conservative, so pricing in just 20 bips before year end versus our economists expect 40 bips. But if we don't even see that second hike, or called the first hike in March, the second hike, if it doesn't come in July, then what does it mean for the rest of the year, right? In the second half, would it just be 10 bips at the end of the day? If that's the case, even if the Fed cut rates by 25, that's still very supportive for dollar yen.
This is really a very quick reaction when it comes to the Japanese yen and JGB yields, right, to what's happened today, given that reports were already out to as much of a reduction of JGB purchases to 5 trillion yen. So what comes next in the long term for the yen until the next policy meeting by the BOJ?
It's really still a dollar story, because if you look at it, the US-Japanese yield gap are still very huge. Whether it's a 2-year yield gap or 10-year yield gap, we're still talking about 300 to 40 basis points. So, I mean, like, there's really nothing much the Bank of Japan can do from a monetary policy perspective to really support the yen. Of course, like, now the next question is, of course, like, whether it has to intervene just like over the last 1 or 2 months. For now, I mean, like, 160 is the handle that market is looking at, like whether the BOJ will come in again at 160. Now, they might, but of course, compared to the April meeting, like, at least from a pace perspective, the yen has been quite stable over the last 2 weeks. So even if it breached 160 this time, we think the Bank of Japan will actually wait a little bit longer to intervene. But that's what it can do to support the yen.
Does that also mean that the finance ministry will have to do more? I mean, we saw that record currency intervention already of 62.9 billion yen. So how much more can they do?
It's really anybody's guess, right? Yeah, they just have to do the same set of cycles. So coming out and talk about yen, saying that they're checking the yen rates, saying that there's herding behavior, and then all of a sudden just basically support the yen, and then wait for a month and announce that amount. So hopefully by these slew of actions and verbal actions as well, they can buy some time until they can really announce QT and rate hike. But it will be the same scenario to the BOJ and Ministry of Finance. They will have to support the yen until then.
Stephen, you got to wonder what the other Asian currencies might be doing on the back of what is transpiring right now.
I mean, like, basically, if the yen managed to rally upon any hawkish surprise, then temporarily it could be positive for Asian currencies. But of course, we didn't get that. So it's more or less the same. It's really the same scenario. It's still dollar-driven, Fed-driven. And of course, now, despite that very disappointing CPI print from the US, I mean, the Fed has cited quite clearly that they will wait until later and only cut once, meaning that it's very likely to be September before the US election. So from now, there's still a few months to September. So Asian currencies, including the yen, are going to be under pressure as just like the last 2 years against the dollar. So central banks will have to stand by to support their currencies if needed again.
The BOJ does what it does best, confuse the markets, keeps the rates on hold. It will say that it will cut its bond purchases, but it will give the details at the next meeting. The yen falling just shortly. Bloomberg Intelligence Chief Asia FX and Rate Strategist Stephen Chu, thank you. And I guess Polka Mishra, as well as our very own Sherry An in Tokyo for all the insights. Thank you very much for that. And of course, you can turn to your Bloomberg for more coverage. Go to TLive Go to get commentary, get analysis from Bloomberg's market editors and experts. Plenty more ahead. Keep it here with us. This is Bloomberg. Well, if you were looking for clarity from the BOJ, that didn't come. It stood pat in terms of those rate decision, but it did say it will cut its bond holdings, though the details will come at the next meeting. Avril Hong on top of all the developments and the impact on the market.
Yeah, as our guest mentioned earlier, it's really the BOJ once again kicking the can down the road in terms of cutting those bond purchases. We'll only hear about its plan at the next meeting. In the meantime, it's going to set up that comments and potentially come through with the banks, the stakeholders, to consider what exactly this plan to reduce bond purchases is going to be. So a little less hawkish than markets had anticipated. We were already seeing, very interestingly, the Japanese bonds running higher ahead of that decision and the announcement from the BOJ, despite some expectations that it was going to come in hawkish. And this is because of the way in which U.S. yields are trading. They're coming lower, and that seems to be prompting some positive sentiment. So after the BOJ, we're seeing the Japanese bond futures surging, ticking higher, and of course, we want to take a look at what we're seeing in the stock markets as well, because if we're seeing the less hawkish Japanese central bank, what's that going to mean for equities? Let's flip the board if we can. Take a look at how the Nikkei is faring. Of course, we're back from the lunch break. It was sitting flat earlier. That risk appetite seems to have improved quite a fair bit, 0.6% higher today. And we are seeing also, if we can flip the board and take a look as well at what we're seeing, the automakers. I think those are the ones that are pairing the losses. Remember, they're the ones that benefit from the cheap Japanese yen, especially against what we're seeing, the dollar-yen levels almost towards that 158 level now. Has.
Avril, thank you so much for that. And we have some headlines to tell you about as well. China selling its 50-year special bond at 2.53% versus estimates of 2.58%. And that's according to a trader. Of course, the frenzy for Chinese bonds, Chinese bonds are showing no signs of abating, with the nation's longest dated special government notes expected to be auctioned near record low yields. As we talked about, we have China selling its 50-year special bond at 2.53% versus estimates of 2.58%. Now let's do a pivot and talk about EV. And this time round, EVs made in Vietnam. We have the billionaire in Vietnam focusing his attention on selling those EVs in a very difficult market, which is the U.S. in particular. It hasn't done so well, but it is confident it will do so amid the difficult environment. I spoke exclusively with Vingroup chairman Phon Nhat Vuong about his goals for VinFast and how much more of his money he's willing to invest in the EV maker. Of course, to date, he's already dispensed about $2 billion of his own money. Take a listen.
We are not positioning VinFast as a cheap brand, but a reasonably priced brand. Our goal is to make good cars at reasonable prices, rolling out cheap prices or higher prices depending on their stage of development. Now, we have completed the development of a full portfolio of models, and step by step, we will roll them out in the U.S. market.
So talk to us about the rollout you have in mind. What will come out next in the U.S. market?
In terms of business, we are pushing strongly to develop our dealership network and increase the number of showrooms to bolster our sales. In terms of marketing, we will opt to market direct to customers. We will invite potential customers to come and try our cars so they have their own experience and enough information to make their decisions.
But can you quantify the targets for us? By end of the year, what's the target for you in terms of sales and revenue, for instance? And for the next 3 to 5 years, what do you envision?
Last year, revenue from the U.S. market was $6.4 million. This year, we expect the sales to grow 30 to 40-fold, and we expect to sustain the strong growth pace in the next 5 years.
VinFast has been spreading its footprint. You've said that Asia is a priority. You have operations in Indonesia, in India. Are plans on track in Asia right now?
We are even ahead of the scheduled plan, and we are still trying to push for that. The Indian factory will be open next year, in the first half of next year.
And speaking of India, we know that you met with Adani, Mr. Adani himself, both in Vietnam as well as in India. Anything coming up, any partnership we should know? Is there anything you can share from the conversations you've had with him?
We have been actively building a partnership. We have been trying to find ways to develop the relationship with them.
How important do you think the Indian market would be for you?
In the future, India will be a very important market, given its large population and speed of growth. India will become a very attractive market.
So it would be the biggest Asian market for you?
Definitely.
How far are you willing to go? You've already invested $2 billion of your personal money to grow VinFast. How much more are you willing to invest in the company personally?
Until I run out of money.
How much more is that?
I'm still working every day to earn money for VinFast, but I think it won't be long. There will come a time when we won't need to raise VinFast anymore.
So you're confident that growth is coming soon enough?
VinFast will reach the break-even point and be able to stand on its own feet.
Mr. Vong, you have a strategy in place, you have targets in place, and investors are well aware of the VinFast story. Yet when you take a look at your stock in the US, they've slumped 95% since the peak in August through the SPAC listing. What is it that investors are not getting? What are they misunderstanding about the company and the company's growth strategy that they're selling down your stock?
I think basically investors are lacking in information. Secondly, VinFast is still developing and has many changes that investors may not be aware of, or they know about it, but they don't understand, or understand but don't like us yet. Also, our business results are still not good yet, resulting in the up and down of the share price. But we don't care much about share prices at this time. In view, the share price will reflect the true value of the company, so now we focus on growing the company. Gradually, the share price will reflect that, and now we don't care much about the fluctuations of the share prices.
And that was Vingroup founder and chairman Pham Vong speaking to us in an exclusive interview, and by the way, his first TV ever interview. Up next, another exclusive interview with the CEO of Indian renewable energy company Renew. We discussed their growth strategy on the back of a fourth quarter revenue miss. Keep it here with us. This is Bloomberg. Welcome back. India has just kicked off its trading day, and one stock in particular we're watching is Ambuja Cement, because this is a company owned by the Adani Group. It was expected to buy cement rival Penna at $1.2 billion to gain capacity. It is on the up right now. Ambuja Cement up by almost 3%. We have India Cements trading in the positive as well, higher by more than 2%. Adani owned Ambuja Cements to buy Penna Cement at $1.2 billion. And India as a whole is back being the darling. We have Aberdeen saying that it favors Indian stocks post-elections. As expect prospects are still supportive, conviction about policy continuity for the next Modi government. Let's keep it here with India. It aims to reach net zero emissions by 2070 and to meet half of its electricity requirements from renewable sources by the end of this decade. For more on these ambitious plans, we're joined exclusively by Sumant Sinha, founder, chairman, and CEO of renewable energy generator Renew. The question is how, Sumant? How do you get there?
I think we get there by three very significant policy decisions that this government has taken. Number one is that, as you know, India's power demand is growing quite significantly at 6 to 7% a year or more as the basic economy grows at 7 to 8%. And I think the big policy decision is that most of this extra demand will be met from renewable energy capacity. And there's a good reason for that. Not only is it better for the environment, but it's also cheaper than coal-based power. And so therefore, by pushing renewables as the first port of call for new capacity addition, and that's one big policy decision that the government has taken. And then secondly, now we've seen action on the ground. We've seen that the government is now beginning to auction off almost 50 to 60 gigawatts of new renewable energy capacity every year, which we'll start seeing that getting built out over the next couple of years. The third thing is that the government is really very actively building out the grid transmission network to make sure that all of this power that is generated in different parts of the country can be moved to other parts of the country as well, so that there aren't any bottlenecks in that regard. And I think on the fourth front, through this competitive bidding process, there is a lot of transparency because central government agencies are involved in buying the power from us. The credit quality of the offtake is very good. And that actually is able to drive large amounts of new capital, both debt and equity, into the country to make this happen. So it's actually a very attractive sector. And that is what is getting more and more people to come in to make these investments to essentially meet the target of net zero by 2070, as India's put it.
Right. The thing is, Suman, we have both ministries now split, right? Power as well as renewables. Is that necessarily better?
No, that's a good question. I think that having had one minister in the past for both power and renewables is actually quite helpful. I think in this case, of course, we'll have to have good coordination between the ministries, and I'm sure that will be the case. We also have a common Minister of State, a junior minister, that is going to be common between the Ministry of Power and the Ministry of Renewable Energy. And then, of course, keep in mind that ultimately the Prime Minister's office will also be involved. The policy-making body, Niti Aayog, is also going to be involved. So I think all of that will ensure that there is commonality of policies and continuity of policies across both the ministries, as we had earlier as well.
Capacity building has been delayed for several reasons. Will that be addressed anytime soon, you think?
No, I think that it certainly will be, because till last year, till 2 years ago, we were auctioning off only about 15 to 17 gigawatts of new capacity. And so with the time lag, we actually had that much new capacity getting added. Last year, we auctioned 60 gigawatts. And this year, the intention is to auction another 50 gigawatts. So with a 1 or 2 year lag, you will start seeing all of these new capacities that have been auctioned beginning to get commissioned. So I would say, let's be patient. You'll probably see a pretty significant step up from last year to this year, and from this year to next year. And that will then put us on a trajectory to get to 500 gigawatts by 2030.
Suman, energy storage is important. In fact, it's key, it's critical. What are you doing about it?
So, more and more, Haslinda, what is happening is that we are having bids that are not plain vanilla wind or solar bids any longer, where we just put the power into the grid and let the grid manage it. Now, more and more, the auctions and the structures that are happening are what we call round-the-clock power projects, where we have to combine wind, solar, and storage together and give much more managed generation profiles to the grid, so that the grid is more easily able to absorb them. This could allow us to deliver 100% generation at the peak times in the morning and in the evening, or across the full month of the year. Now, those projects that we are bidding on, and by the last year, almost 40% of the bids were for these more complex auctions. Renew, in fact, won a quarter of those bids. And in those bids, we require a lot of storage. And so, therefore, we as a company will be setting up almost 1.5 gigawatt hours of battery-based storage over the next 3 years as part of some of these bids. So they're not standalone, but they're integrated into the wind and solar parks that we are setting up right now. So I think in that sense, the government is being quite prudent about how they're slowly increasing the amount of storage in some of these auctions that we are now seeing. And that will then, I think, ramp up. And I think in the future, what you'll also start seeing is standalone bids for grid storage as well. And I think that will essentially meet the grid's requirement for that extra storage that we'll require to shift some of the daytime to the evening.
Right. Renew has talked about projects that will take it through to 2030. Where are you with that?
So we are actually quite well advanced, Haslinda, on that, because we've finished, as you know, 10 gigawatts of total installed capacity, of which roughly half is wind and half is solar. We have a pipeline of another about 12 gigawatts more, of which half the PPAs are already signed, and the other half are things that we won in various auctions that we've got letter of awards for, and we're waiting for the PPAs to get done. We've got connectivity, transmission connectivity for all of this capacity, and we're fairly far advanced in executing the capacity that we're going to be putting up in the next couple of years. And so you will see a fairly consistent capacity addition from us as we look to execute against the 12 gigawatts of capacity that we have in the pipeline right now. And I think over the next 4 or 5 years at max, you'll see us completing all of this capacity. So we're fairly far advanced. The equipment is more or less there. We've got into our own solar manufacturing plant. And so therefore, all of that is dedicated capacity that is coming to us. On wind turbines, we've got also good equipment supply agreements already in place for all of this capacity. So I think we're in good shape to get this capacity done. And on the capital side, frankly, debt capital is not a problem for us. Our rates have not increased at all from earlier rates, before COVID. And so we have a lot of good partnerships with a lot of debt financing companies. So we don't see any issues on the debt financing side. And on the equity side, most of it is going to be met by internal cash flow accruals and some amount of asset sales that we'll do over this time period.
Suman, we know that China has created a glut in solar panels. Is that making your procurement cheaper? Is that benefiting you in any way?
It certainly is, because, we are buying cells from China. Now, you would know that in India, we are not allowed to import Chinese modules any longer because the government has put a restriction on that. So all modules have to be made in India, but the cells we're able to buy from China, and of course the wafers for our cell plants. So to the extent that wafer and cell prices also have come down substantially, to that extent we're actually benefited quite significantly from the decline in solar capex. And that's actually something that we will be able to show in terms of lower capex per megawatt for solar going forward.
Suman, thank you so much for that. Suman Sinha, founder, chairman, and CEO of Renew. Before we go, let's recap those lines from the BOJ. Of course, a much anticipated meeting and decision. It is keeping its rates unchanged, is vowing to cut its bond buying, but it will specify that bond buying plan only at the next meeting in July. Talk about confusing the market and kicking the can down the road. The yen falling as investors expected. Details on the bond buying cuts. The yen currently down about 0.5% versus the USD. The yen, of course, in focus. Japan's economy may be too weak for Ueda to speak strongly about the likelihood of further hikes to jawbone the currency higher, of course, and pressure that Sharian will be attending at about 3:30 local time will be key in answering some of the questions that investors may have at this point in time. Again, the BOJ, keeping its rates unchanged, is vowing to cut its bond purchases, but it will specify that only at the next meeting. That is it from Bloomberg Markets Asia. Horizons, Middle East and Africa is next. Keep it here with us. This is Bloomberg.